Hey, cats, happy Monday. I'm recording this on Friday, of course, but happy Monday. We are having an amazing market right now. I'll tell you, we were looking at our volume. Thank God we're up a little bit over 260% year over year. And we're seeing market activity continuing to increase. Now, when I take a look at the HIR weekly snapshot, it's showing slightly down in closings and showings, but we're seeing more applicants. We're seeing more interested people who are wanting to buy. We're seeing more potential buyers. New listings are down, pending listings are down, off-market listings are up. However, we still do have a lot of inventory. If you're looking to buy right now, or if you've got clients who are looking to buy, this is a great time to look to negotiate because there is more inventory on the market really than there has been since 2020, 2019. We had all those years where you didn't have listings. Now we've got a glut of them, and there are sellers who are willing and motivated to move. So this is the time. Don't sit on your hands. Now, what's going on in the mortgage markets? The mortgage market's been fairly volatile over the last couple of weeks. The Fed, of course, came out and said no changes, but we've also got a new Fed chief. And let's talk about what I think is really going to move the market. Jobs reports. So we had the JOLTS report, the job opening and losses. We saw that the JOLTS report was revised down in November from 7.15 to 6.93. And December, they were looking for 7.2 million. We only got 6.5 million. That's a huge miss. That's like more than a 10% miss. Challenger job cuts report, 108,435 cuts in January. That's triple the amount in December. Remember, we talked about the fact that in January, we were going to see more cuts because those retail jobs that are seasonal, they're going away. Hiring plans are also extremely weak. Revilio Job Labs showed 13,300 losses in January. That's right after the weak ADP report that came out. So we're starting to see a lot more weakness in the job sector. This is going to probably push interest rates down in the near future. Also, initial jobless claims rose in January from 22,000 to 231,000. Continuing claims actually rose 25,000. This means that more people are filing for unemployment and staying on it. Now, let's talk about other things that could potentially move the market. We've seen major swings in crypto. Bitcoin is down 50% from its high, and most of the other coins are going down as much as 70%. There's a lot of volatility there. Gold and silver have come off of their huge highs with really big swings. And right now, there's just a lot of uncertainty in the Gulf. The people in Iran, they're suffering, and it looks like the president is getting all the chess pieces in place to help the people of Iran with regime change. So this is a huge call and cry for freedom. This is a huge world-moving event because Iran is currently the world's #1 state sponsor of terrorism. If we see something happen there, there's generally a flight to safety, which means money would come out potentially of the equity markets, the stock markets, and go into the bond markets, which could also drive interest rates down. I'm not gambling on any of this because we don't know what happened. This is why I'm saying there's a lot of uncertainty and instability. But the one thing that I do see is there's opportunity. There are lots of folks that want to buy right now. There's lots of inventory out there. There are a lot of people that want to sell. So this is a great time to get out there, have a great mindset, be positive, be excited, make your calls, do your social media posts, but be out there all the time, and you're going to see the businesses coming to you guys. This is Rich with Habayat Home Loans. Have a great week.